Just want to make this video for risk management and market analysis, the Fed balance sheet, the VIX. I'm going to go over some indicators here. And the Zig Zag indicator is an indicator we have that measures a 1/3 of 1% move, and it counts all the turning points in a day. Today it hit 80. It has not been that high since the pandemic on the NASDAQ. So let's look at a chart of that. So I'm plotting the value at the end of the day of the CVIX, of the Zig Zag indicator, in the number of turning points of 1/3 of 1% of the market, previous day's market close. And I haven't plotted it for today yet. If I plotted it for today, it would be up here at 80. I'm going to go ahead and add that. So there it is with today's data point. We have a zigzag of 80. Two other times it's been this high was pandemic, the height of the pandemic, and the height of the financial crisis. We know that the Fed stepped in both cases. This was extended more than the pandemic, the financial crisis of 2008, 2009. And the Fed stepped in both cases. And the Fed has committed to reducing its balance sheet, raising interest rates, instead of being able to step in these situations and rescue the market per se. And so manage your risk. There's been a 98% drop in one of the top cryptos. And so I don't think there's going to be a 98% drop in the market, but you could have some limit moves, some flashy downside. You could have some 10% down days or more, potentially. I'm not predicting that. I'm not saying to be fearful of that. I'm saying to manage your risk, make sure your automation is working in your trading systems, and that you are protected from automation errors during this time when the market is at extreme levels of volatility. And so you want to watch that and measure that. I also want to share with you the Fed's balance sheet. They were supposed to, and I've got a couple other VIX indicators to show you after that too. Fed's balance sheet went up $2 billion this week. The Fed had originally committed to reducing its balance sheet by about $95 billion per month starting in May, and they haven't started yet. So you have to wonder why it went up about roughly $2 billion this week. And maybe at the end of the month they'll reduce it to honor their commitment, but you have to wonder why the balance sheet reduction has not started yet. What do they know that we don't know? What are they fearful of if they reduce the balance sheet when the market's at these lows? And so let's also look at the CVIX indicator. The CVIX indicator simply takes the number of zigzags and divides it by the VIX. 2.55 highest level. 2.51 was the last time it was above 2.5, and that was on January the 24th with a massive reversal. So we also have a VIX divergence. The VIX seems strange to me. It's down 3 days in a row. You see it closed here, down, 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 3 down closes, while the stock index futures have had 2 days in a row of down closes. Here's the NASDAQ day session, 1, 2 down closes. In the S&P closed here, 1, 2 down closes. So 2 down closes in the stock indexes and 3 down closes in the VIX. They usually move in opposite directions, so that's why there's a divergence. And oftentimes when there's 2 up closes in the VIX and two up closes in the stock indexes, we call that a VIX divergence for a top. This could be a potential VIX divergence for a low as well. And so just an interesting inflection point in the market where it's at this level right here where it's sold off hard, and there's a lot of propping intraday, and so you could see some further selling. If either way, it could bounce really hard here, or it could go down really hard here, and so we could be up for some big moves in one direction or another. It's hard to determine which direction this market could go. It sold off significantly, but if you look at it on a longer time frame, the Fed started its stimulus right here, and it's given quite a bit back, but not quite half of that back yet. And so that's the NASDAQ. Here is the S&P, and let's compress that. So it hasn't given quite half that rally back yet either. And so we're at this point now, based on volatility, based on VIX divergence, based on what the Fed's doing. Are they going to pivot? The market could make a big move either way if the Fed doesn't pivot. The market could have some pretty harsh selling here, considering that the intraday price action has not really been that harsh, and so we need a good washout for a reversal. So just a reminder of where we are in the volatility cycle. So manage your strategies, make sure your automation is working, make sure your stop losses are in place.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.